Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock with news of underwhelming data in the top two global economies. First, the US industrial production data fell in September from August in a retreat the market didn't see coming. But two events crimped the result. Hurricane Ida had an outsized impact and the chip shortage curbed car making severely. As a result, American industrial production fell 1.3% when a 0.2% gain was expected. In China, more evidence of a sharper slowdown than expected there too. The Chinese economy expanded at a 4.9% year-on-year pace in the third quarter of 2021 and well below the 7.9% growth in the second quarter. It was also well below market estimates of 5.2%. It was the slowest expansion since the third quarter of 2020 and is due to their electricity problems, widespread supply chain bottlenecks, a faltering property sector and persistent Delta outbreaks. And it seems likely that this is not yet at its lowest point. Chinese retail sales rose 4.4% in September from a year ago, better than the weak 2.5% gain in August, but they're still miles lower than the 8% expansion they had been regularly getting pre-pandemic. Yes, they're recovering, but still quite crimped. And electricity production fell in September from August, but it was 4.9% higher than a year ago and almost 11% more than in September 2019. Their power woes may be getting the blame for China's slowdown, but their problems run far deeper than this. China's industrial production was another disappointment, continuing a slow but relentless atrophy since March, with only a 3.1% year-on-year expansion and not enough to drive their economy or employment. Apart from the start of the pandemic, this is actually the slowest expansion in Chinese industrial production in almost 20 years. All this is now in sharp contrast with the Indian economy that is now back expanding sharply, now larger than pre-pandemic levels. The Reserve Bank in India's Economic Activity Index indicates that real GDP grew by almost 10% in the third quarter from a year ago. The US Treasury 10-year yield opens today up 1 basis point to be now at 1.58%. The Australian government 10-year benchmark is up an unusual 10 basis points at 1.76%. And the Chinese government 10-year bond is up an even more unusual 6 basis points at 3.06%, and its highest in 100 days. And the New Zealand government 10-year leaped by a spectacular 17 basis points on the CPI results and is now at 2.35%. These sharp rises probably mean both the New Zealand dollar and the Australian dollar are now somewhat undervalued. And the price of gold has slipped by another dollar to be $1,766 an ounce. And oil prices are 50 US cents softer at just on $81.50 a barrel in the US, while the international Brent price now just under $84 a barrel. And the Kiwi dollar opens today at just on 70.8 US cents and up marginally since this time yesterday. Against the Australian dollar, we're now at 95.5 Australian cents, and against the euro, we're still at 61 euro cents. That means our trade-weighted index starts today at just on 74.5 and now well over the top of the 72 to 74 range of the past 11 months. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.